Hello everybody, welcome to FX Street. Today we are going to be talking about Decentraland and how momentum is building for a bullish breakout towards $3.50. But before we dive into the technicals, please make sure to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto to be updated on the hottest trends in the cryptocurrency market. Looking a bit more in detail at Decentraland, we still have a long way to go, before we can dream about touching the upper level of our Fibonacci retracement at just shy of $6.10. But before we get there, we first need to drill further a little bit more into the price action for today, because although most cryptocurrencies are on the front foot, it looks like Decentraland is taking a bit of a breather in what should have been a two-day winning streak, although yesterday bulls refrained and forfeited a little bit in trying to make a daily close above the monthly pivot that just has started since yesterday. We had the 1st of March. But instead, for the moment, it looks like price action has been caught between a rock and a hard place, with below the 55-day simple moving average around $3.77, and to the upside, as previously mentioned, the new monthly pivot, which is at $2.86, give or take. So price action is getting squeezed in, and that fits the narrative as well. If you look at the length of the previous candle from the end of February, a very large bullish candle, all the way up to the monthly pivot. Then you get a bit of a smaller candle, which was only even less than half the size of the candle from the 28th of February. And today it even looks like we are getting into an even smaller candle. So we get a sort of a squeeze, price getting squeezed from both sides, from both sides, with lower highs and higher lows. So key will be to see, as long as this 55-day can hold it, then we favor the bullish breakout to the upside with a pop above the monthly pivot. That should run quite a lot of stops from bears that have entered here in this wick of the candle. So we could see quite some stops being ran, and that should trigger an overshoot up to almost $3, which brings us at the 78.6% Fibonacci level. And from there, all in all, we have some room to go to. Towards $3.50, and the reason behind this is because of the fact that we see quite a lot of broad interest in cryptocurrencies overall, and that's mainly due because of the sanctions that have been imposed in Russia, and people there on the ground are looking for other means of payment, simply because everything has been cut off, and the ruble is devaluating very, very largely. Most historic movement ever in the history of the ruble price action. So people on the ground are looking for other means of payment, and that proves to be then cryptocurrencies, which are exempt from any sanctions and who normally can't be sanctioned or put into sanctions because they aren't centralized and they aren't regulated by central banks. So as we already saw in the most top 5, top 10 cryptocurrencies, we saw broad inflow of retail investors and retail users using it as a new way of payment. And normally that should start to trickle or to filter into Decentraland as well. So I expect once we hit above the $3 marker, then we should see further inflow from investors and from that positive influx wave into most of the cryptocurrencies, and as well Decentraland towards $3.50. Same goes as well for the relative strength index, the RSI, smack in the middle at 50. So quite a lot of room to the upside, but you can see as well we had large waves, and now price is getting squeezed towards each other. Bulls and bears are getting squeezed towards each other. So I expect a bullish breakout in that sense. On the other hand, we have peace talks today between Ukraine and Russia. We have Fed Powell speaking. We have non-farm payrolls coming up on Friday. All things considered, still quite eventful moves that can overnight easily push price action to the downside. That would mean a close below the 55-day moving average would see bears going in for the kill, squeezing out the bulls, in that squeeze, and then we could see a full fallback towards $2.57. That's a purple line here, going back to the low from December 4th, and then we might even see a further deterioration all the way back to $2.15 with the monthly S1 support level and the low of November 10th of last year coming in for some support and catching the price action. But all in all, that level, certainly interested to have it marked up in case that should occur, an interesting buy level to pick up. That's it for Polygon. Sorry, for Decentraland, apologies. Please remember to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto. And catch you next time.